All right, good morning, everybody. Welcome to the Genex Power FY21 financial results presentation. Before I hand over to Simon Kidston to talk you through the results, there will be a Q&A session at the end of the presentation. Please use the Q&A facility in your Zoom to ask a question, and we'll read that out at the end of the presentation. With that, I'll now turn over to Executive Director Simon Kidston. Simon.
Thank you very much, Craig. Great to be here, and it's really been a transformative year for Genex Power. FY21 has seen a substantial step change in scale. We've now got $1 billion of renewable assets, and it's also been a year where we've substantially stepped up our cash generation. I'm delighted to be here with my two colleagues, James Harding, Chief Executive, and Ben Guo, Chief Financial Officer. Together we'll present the presentation today and give you an update on our financial performance for the year ended 30 June. So Craig, if we can just move to the next slide. Really just by way of summary, of course, everyone who's a shareholder and follows the company knows that we're now a diversified business purely focused on renewable energy generation and energy storage. Our flagship operations are in North Queensland, and we've recently commenced construction of our flagship pump hydro project, which is proceeding well, and we'll have further to say about that later today. We've also got a very exciting battery project which is currently under development, and that looks like making a material contribution to our revenues next calendar year. And of course, we've just completed the commissioning of the Gemalong project, and that is of course providing now strong contribution to our earnings in the current financial year. So we'll just step through to the following slide, and James Harding will give you a snapshot of the financials.
Yeah, thanks, Simon, and good morning, everybody. We've had a strong performance in the last financial year as a company. The figures along the top, total generation is up 14% in the year, 132.8 gigawatt hours generated. Underlying revenue was 13.8 million, that's up 12%. Underlying EBITDA of 1.8 million, it's a tad up at 3%, and we have a very strong net cash position of 45.4 million as at the year end. We secured all the debt and equity funding required to complete the K2 hydro development. We achieved financial close on that project a few months ago, as you know, and we've commenced construction, which is now ramping up strongly. Very pleased that we've commissioned our second solar asset, Gemalong Solar Farm, during the year. That's going to drive a big increase in our revenue from this financial year onwards. I should say that we've had some good revenue numbers pre-year end. These are not actually included in the underlying revenue number above, as they're accounted for differently. And we've progressed our immediate pipeline projects very strongly as well, the Bouldercombe battery and K3 wind projects, which we'll talk about further. Ben, do you want to take us through some numbers?
Okay. And good morning, everyone. So on this slide, this is a snapshot of our financials for the current year. As you can see, net assets has substantially increased in the current year, and that's a reflection of both the completion of construction activities at Gemalong, as well as kicking off construction activities at the hydro project. In terms of cash flows, it was another capital intensive year for Genex, 153.4 million spent in capital investments, and that trend is going to continue for the next few years as construction activities at the hydro project really ramps up. Now, importantly, we finished the year with 45.4 million in cash, so Genex remains very well funded and fully capitalized to complete the construction project it has on hand. Now, just before moving on to the profit and loss, I think it is worthwhile highlighting two one-off items for the year. The first and most substantial one is we've had to take a non-cash impairment charge of 16.5 million against the Gemalong solar farm upon the completion. And it's important, I think, to give everyone some context behind that impairment charge. So as people may know, when we funded Gemalong initially, it was funded on a merchant basis, which means we didn't enter into a PPA. Instead, we left the revenues to be exposed to the merchant or the spot market and its fluctuating prices. And we were able to fund the project on a merchant basis because we bundled its cash flows together with the strong contractual cash flows that we have from KS1. And the banks essentially treated the two projects as a single portfolio. They're cross-collateralized, and we project finance the two projects under one facility. What that means is when we funded Gemalong, it was funded with a very high gearing, about 80% levered, and we accessed the debt at a very competitive cost, just over 3.2%. So as a lot of you would know, the main value driver for these renewable projects, whether it's solar or wind, often comes from the capital structure and the amount of gearing you can achieve. So a lot of the valuation that we derive from Gemalong did come from the high level of gearing we've achieved. Now, unfortunately, from the accounting perspective, when our auditors undertake the impairment testing for Gemalong, they're not able to view the two assets under portfolio. They must view Gemalong as a standalone asset, and as a standalone merchant asset on the, it was very hard for them to prescribe much leverage to the project, and the cost of funding as a standalone project, whether the cost of debt or cost of equity, would be substantially higher than what we've actually managed to achieve. So using those assumptions, obviously the valuation they derive is much lower will be much lower, and that's the main driver for the impairment charge. Important to emphasize that the impairment charge and the valuation that comes behind it bears no resemblance to the commercial reality of Gemalong, which is, as James said, has been completed on cost on budget and performing exceptionally well. So that was the first one-off item. The other one-off item is the recognition of $7.9 million of revenues, and that was basically the conversion or the forgiveness of the convertible note from Arena. So as people will recall, we had access some funding from Arena, but that was a convertible note and set as a liability. That was forgiven as part of the financing for the hydro project, and therefore we recognized that whole amount as a revenue item in the current year. So if we, I guess, remove the effects of those one-off items, the underlying revenue 13.8 million increase from last year. Underlying EBITDA and underlying net loss figures are very consistent from compared to last year as well. And Craig, if you can go to the next slide. So again, important to emphasize, I think that despite the impairment charge, which is purely an accounting nuance, Gemalong itself is operating very well. It is fully complete and actually has been generating at full capacity since June this year. We're just finalizing documentation with our lenders and EPC contractor to reflect practical completion as of 30 June 2021. And pleasingly, if you look to the chart on the bottom right-hand side, the average bundle price, that's the electricity price and LGC prices that we've managed to achieve since Gemalong coming online, has been well in excess of $100 a megawatt hour. That's certainly higher than what we had in forecast internally for Gemalong. So that's a pleasing result. And in comparison to the PPA market, which is probably currently between $50 to $60, you can see that why we've chosen with the merchant pass for Gemalong at this point in time. It's just much higher revenues. So I might hand back to James.
Yeah, thanks, Ben. So we're now ready to execute on our growth strategy. It's an exciting time for Genex, as Simon has said. We've got now 100 megawatts of solar as a sort of solid platform from which to build. Very happy that Gemalong has come on stream and is performing so well, operating at full capacity now, and was constructed on time, on budget throughout the COVID period. So it's a credit to our team and a credit to the contractors working on the project. And we're now constructing the K2 hydro project, as you know, 250 megawatts. So we'll have, at the end of 2024, we'll have 350 megawatts in place. We're further leveraging the relationships that we've built up over the past few years with strong government and commercial financing entities to build out our growth strategy. As we mentioned before, the Bouldercombe 50 megawatt battery project and the 150 megawatt Kidston wind project are the two immediate pipeline projects that we're focused on, but we're also using our market knowledge to identify other opportunities, and we see some strong opportunities in particularly storage elsewhere in Queensland and throughout the NEM. If you could go to the next slide, Craig, thank you. So our battery growth plan is quite exciting for us. We see particular need for storage in the market these days, and we have particular capability that we've developed through the last 3 years of developing the Kidston hydro project, and particularly we understand the value of storage in Queensland. Batteries are obviously storage devices that have a slightly different profile to pumped hydro. They tend to be shorter storage duration, but they're very fast start. So we're able to access not just energy arbitrage, but also these ancillary service revenues called FCAS, which helps to stabilize the grid, providing frequency regulation, voltage control, and so on, and to maximize the profitability of the equipment. We're also keen and intend to establish battery configurations which are flexible and so able to adapt to changing circumstances and new revenue streams as they come on. For example, we know that there will be a market in the near future for fast frequency response from these very fast startup machines, and also for inertia. As coal-fired power plants come off the grid, there will be a market for synthetic inertia, which batteries can provide. Next slide, please, Craig. So the first cab off the rank for Genex in this battery strategy is the Bouldercombe battery project. That's a 50 megawatt 2-hour storage facility located inside the fence of Powerlink's Bouldercombe substation in central Queensland. Excellent location on the grid and a very short connection point, obviously, into the bay at the substation. We've secured land within that substation fence. We've well progressed the connection and GPS arrangements with Powerlink. We've selected and are in advanced negotiations with one of the leading battery suppliers and integrators. We've progressed offtake arrangements as well to a point where we have signed term sheets, and we're in detailed funding discussions with potential lenders and a strategic investor. So all in all, we're looking to complete the arrangements and reach financial close at the end of this calendar year. It'll be just over a 12-month construction period. The capital cost is a little over $1 million per megawatt, and operating costs are around $1 million per year. So looking forward to implementing that project and having it come on stream very early in 2023. Excellent, thank you. So this picture, probably quite familiar. This shows Kidston, the old gold mine. This is the Kidston Clean Energy Hub, which we've been developing since the company was established in 2014. The first project is the Kidston Solar Farm, which you can see at the top right, sitting on top of the tailings dam. That's been operating since 2017, connected to the Ergon 132 kV distribution line. The red dotted line across the screen is the new 275 kV transmission line being currently built by Powerlink, connecting into a new substation at Kidston, and that will be the connection point for Kidston Hydro, which is under construction, utilizing the 2 pits you can see in the foreground. That should be operational by the end of 2024. And in the meantime, we're developing the third project at Kidston, which is the 150 megawatt Kidston wind. You can see in the background a schematic. We've got a very good wind resource nearby, and it's in good close proximity to Kidston. So we will end up with the trifecta of solar, wind and hydro all in the same place, providing stable renewable power into the grid. We also have the possibility to expand the solar. We have land available and some of the permitting is being done for an expansion of that solar project. Next slide. So the Kidston Wind, we're developing very closely with our strategic partners, J-Power, whom you'll know are now a 10% shareholder in Genex Power. They're one of Japan's largest electricity producers, the second largest wind producer in Japan, with over 2 gigawatts in their operating and development portfolio. We've agreed with them a 50-50 joint venture to develop the project, and we're looking to complete the monitoring and assessments of wind, secure the approvals and start construction probably in early 2023 and have that come on stream very soon after the Kidston Hydro project, end of 24 or early 2025. I'll hand over to you, Simon.
Thanks, James. So I guess Genex is now the only pure play renewable company on the ASX. And I'm very, very proud the business in the portfolio now is genuinely diversified. It's diversified by geographic location and diversified by technology. At our core, we've got the very strong cash generation from our 2 operating solar farms. And importantly, we've now locked in what I think is going to be a very attractive growth opportunity for the business. And of course, the pump storage hydro is a key element of that strategy, fully funded in construction, and we expect a material contribution to our earnings and revenue from 2024. In the short term, the Bouldercombe battery project is coming together. That will be funded late this year, and I'd expect that to be operating 12 months thereafter. So further emphasising the diversification and growth in our cash flows. And the wind project at Kidston is looking very attractive. We're delighted to partner with J-Power. They've got a very strong track record in operating wind assets in Japan, and we're able to leverage that expertise to develop what I think will be a very attractive wind project in North Queensland. Just on the following slide, we do have a very strong commitment to our people, the environment and the community. And we have for the first time made a statement in our annual report, which we released earlier this morning, about the strong focus we have on corporate governance and what's known as ESG. To put that into simple terms, what I'm very, very proud about is our contribution to the environment in terms of CO2 abatement. This portfolio, when fully operational in 2024, will abate or save around 2 million tonnes of CO2 per annum. So that's a huge amount of CO2 abatement, which is equivalent to 350,000 households. So I'm very, very proud of that, of course, doing so in the context of a very strong cash generating portfolio. And finally, of course, our focus on the community, again, something which we're very proud of. We have a very strong commitment to local employment and in particular, Indigenous engagement and employment. And at this very moment, we're in the process of recruiting some Indigenous apprenticeship people that will join our team under an apprenticeship program and provide what I think will be what I hope will be a lasting and enduring impact on their lives and the lives of their people in their community. In terms of job creation at the moment, something governments and people are very focused on in these COVID times. Some 800 people, actually 900, if you include the transmission line, are being employed as we speak to deliver the Kidston Pump Hydro project. It is iconic for Queensland, and it is a very major employer in the northern part of Queensland. And just finally, just to wrap up on the following slide, the business, as I said now, it's diverse, it's got scale, it's over $1 billion of assets. The management team has now got a proven track record of delivering projects on time and on budget. Of course, the Gemalong project was built last year when COVID was at its peak, and notwithstanding that, we managed to deliver that project on time and on budget. We do have some very strong relationships with tier 1 counterparties, and those relationships have meant that we can underpin our revenues with a high level of certainty all the way out until the 2055 period. So a very, very strong base of revenue, which over time, a portion of that can flow through to shareholders as dividends. So James touched on that pipeline. I think the battery strategy will deliver earnings growth. And of course, the wind project is a very, very exciting project, which we're keen to bring to the market over the coming period. So I think that ends our presentation, but of course, we're happy to take questions, I think, Craig, if there are any.
Thanks, Simon, James and Ben. Just a reminder for everybody, use the Q&A facility in the Zoom webinar and I will read out your questions. There's been a few that have come in around Gemalong, but if Gemalong is to remain exposed to the spot market, what do you think the outlook is for wholesale prices in FY22 compared to FY21?
Look, I might take that one, James. So we don't actively forecast the I guess the forward price curve. We use sort of a consensus curve that market consultants provide to us. I think it's fair to say the curve over the longer term, and in real terms, the wholesale market prices does decrease, but certainly in the short term, so 2021, 22. Prices are expected to remain fairly robust, and I think from memory, it's sort of hovers around $70 to $80 on a bundled basis. And now clearly we're achieving better than that at the moment. So reality is better than forecast in the current year, and we hope that's still the case for the next years as well.
Thanks, Ben. Next question. Gemalong appeared to be energised in December 2020, but no revenue in the FY21 year. Why did that occur?
Yeah, do you want to take that, Ben? I'll start. Essentially, the way that's accounted for is that was put in the accounts that there was some significant generation pre-practical completion at the end of June. But that was not taken in as revenue. That was accounted for as a reduction in capital cost, essentially, if you want to add to that, Ben.
Yeah, exactly. So I guess the accounting treatment is for generation prior to practical completion is not recognized as revenue. It's recognized as an offset to the capital cost. So I guess in dollar-wise, the pre-practical completion revenues for Gemalong has been about $670,000 to date. That's excluding LGCs as well. So LGC is probably another $200,000 or $300,000 on top of that. And that's being offset against the asset that's been capitalized. Now, important to note, most of that money came from generation actually in June, because we only achieved full generation in June. We did energize much earlier, and it's just being some of a slightly longer, I guess, commissioning process than we obviously originally anticipated. I'm not sure if you want to add to that, James.
Yeah, so maybe I will talk to that. It is indeed, I think the target originally was to reach practical completion in March. There were a couple of factors. One was COVID. Obviously, New South Wales project, we did have our main contractors obviously based in Victoria and some of the key SCADA suppliers in South Australia. So mobilising back after Christmas when there were lockdowns and restricted entry requirements did cause a little bit of an issue in January. I guess that's point one. Secondly, the normal whole point process with Essential Energy, which is the distribution company, and AEMO, there was some backwards and forwards, which is absolutely normal on the network, which meant that although we were generating, we were needing to receive the final sign-off by both Essential and AEMO before we could move to the next whole point. So what that meant was the whole point testing program was a little bit more protracted than initially planned, but noting that we were able to generate during those periods in any case.
Great, and just a quick follow-up question on that one. Should we be expecting to see revenue from Gemalong in the first quarter results of this year, of the FY22 year?
Yes, we should, absolutely.
Yes.
Yeah, no, we'd expect a strong contribution, especially now that irradiance is picking up as winter passes and we're in spring. Greater radiance, greater generation, and greater cash flows. So it's performing very, very well, that plant, and it's been indicated on his slide. We've been realising in excess of $100 on a bundled basis per megawatt hour. So we'll see that in the results in the current quarter.
We do see a difference between Kidston and Gemalong in the behaviour throughout the year. That during the winter months at Gemalong, the generation does drop off below the average, whereas during the summer months, and clearly where we expect strong pricing and strong demand, it's over the average. So we do expect a good performance from Gemalong over the next 6 months.
Okay. And then just another question on Gemalong. I'll keep rolling all these ones through. How strong is the PPA market at the moment around Gemalong? And if it was contracted, future revenues, what would that do to carrying value?
I'll just take that and maybe hand over to Ben. So there is a good prospective PPA market, particularly amongst corporates and other organizations, especially for de-risk projects, I would say, and ones that can provide energy and can demonstrate that they will be providing energy in the short term. Gemalong, now that it's fully operational and up and running, is able to benefit from that certainty. And obviously, we're keen to contract part of the generation, as we've indicated previously, but we are in a stronger position to dictate pricing than if we were looking to contract pre-construction. So we have a number of conversations ongoing at the moment, and we're confident that we can progress those over the coming months. Ben, do you want to talk about the value?
Sure. Look, and just to add further to what James has said, we have observed over the last 12 months the PPA market has improved. So I think 12 to 18 months ago, people were talking about prices below $50, and certainly that's no longer the case. It's very much heading up, and so the opportunities now are presenting themselves between $55 and $60. So that's the trend we see, and we see going forward. In terms of the carrying value for Gemalong, look, if we do enter into a PPA at those sort of values, then certainly from an impairment testing perspective, the auditors will be able to bring in the value of debt at that point, that's certainly going to be positive to the carrying amounts. I'm not going to sort of anticipate sort of what our carrying amount would end up, but I guess the thing with asset impairment is if you are able to realize a higher carrying amount in later years, then you can potentially reverse the impairment charge. But we won't make any forecasts of that now until we've actually landed the PPA.
Great, thank you. Probably another question for you, Ben. Can you please provide a breakdown of what has been backed out to reach the underlying numbers and to reconcile those back to the statutory numbers, please?
Yeah, so I think I touched on that on the slide, but essentially it's two items. One is that $16.5 million impairment charge, and the second is the 7.9 million revenue for recognizing, also for the forgiveness of the ARENA convertible notes.
Great, thanks. Next one's, there's a few questions around Bouldercombe. First one, have you any view on how you would potentially look at funding Bouldercombe, and then what steps should the market be looking for between now and the end of the year in terms of the development of that project?
Yes, I'll take that. Yeah, so as I mentioned on the slide, we are progressing all the work streams, and they're all very advanced now in terms of the connection agreement with Powerlink is clearly the one that's often on the critical path. We're very advanced with that particular work stream, and we're looking to conclude supply agreements over the course of the next 2 or 3 months with the suppliers and integrators, and we are in negotiation now on long form offtake documentation, having agreed term sheets for that. So we have all the elements in place to commence those discussions with potential lenders, which I mentioned earlier. So we are in that financing process. We're discussing with both a number of prospective project finance banks and a strategic investor to come in at the equity level. So we're looking to pull those all together by the end of the last quarter of this calendar year.
Great. Next question, if the national energy market moved to a capacity market, how might that impact the agreement that you have at Kidston Pumped Hydro with Energy Australia? Would you receive the capacity payments, or would Energy Australia?
Yeah, look, so unfortunately, it's a very strong offtake arrangement, rental basically arrangement that we negotiated on a very long-term basis with Energy Australia. But what that means is that they retain the P&L, they retain all revenues and benefits from that arrangement and pay all costs. So to the extent that there is a new capacity payment payable to devices such as the Kidston Hydro, that would be for the benefit of Energy Australia. However, for other storage projects, and we are deliberately looking at different strategies for Bouldercombe and other storage opportunities, certainly if a capacity market does come in, then Bouldercombe would benefit and Genex would benefit, and the equity would benefit from that.
Great. Next question is around interest rates. In terms of financing, interest rates are low at the moment. Potentially they could rise in the future, having an impact on both Kidston and Gemalong's financing. Do you have any strategies in place for hedging, or is this something that you're looking at?
Yeah, no, look, good question. So I guess, all these projects are project finance. So the banks obviously lend us money to be repaid over a long horizon, and they need certainty over sort of cash flows, and that means for each of our projects, the interest is always under either under a long-term hedge, or the interest itself is fixed. So there's very little, I guess, interest rate risk within our projects.
Thank you. Next one's on the longer term growth. Can you please provide an update on the 270 megawatts Kidston Stage 2 solar farm? Is that still part of the pipeline?
Yes, I can. It certainly is part of the pipeline. So obviously, solar pricing in Queensland is challenging at the moment. We see a lot of solar has come on both in terms of utility scale and increasing rooftop solar in Queensland, which has depressed pricing during the middle of the day. And that's one reason why we've prioritised and accelerated the development of the Kidston Wind project, because that profile is very much opposite to a solar generation profile, and we see that very complementary to the existing facilities at Kidston. But we certainly think in the medium term and longer that there will be a good potential for solar in Queensland, obviously as coal-fired power backs out and as more storage and dispatchable generation comes in to replace that, we will see that there will be a increased demand for solar, and clearly there are options around providing firming capability through addition of batteries and storage devices to provide a shaped output. So it's certainly part of the planning, but it's a medium-term pipeline project for us.
Great. And James, probably a follow-up question from that one. What is the capacity, what is the limitation of the transmission line from Kidston in terms of your growth potential at the Kidston Clean Energy Hub?
Yeah, that's a very good question. So obviously there is a limitation on the capacity of the line. It's sort of in the order of 600 MVA. What you see is you have what we're trying to do is see if we can load up the line so it's fully utilized, obviously 24/7 to the maximum extent possible, and also taking into effect that the pumped hydro will be operating in both directions, pumping and generating. So we see that with the pumped hydro, with renewable energy generation generating at Kidston, being able to be absorbed by the pumped hydro and then exporting at other times. And also I should also mention that the pumped hydro provides good system strength in that area. So when it's pumping or generating or can be operating in synchronous condenser mode, that provides a very strong network for those renewable energy generators to dispatch.
Great, thank you. We've got one last question, which has been asked twice, so the person must really want this one answered. It's a bit left field, so please bear with me. In the US, there's been a considerable growth of crypto mining ventures located next to renewable energy hubs. Is this a strategy that Genex is looking into?
Yes, that's obviously an interesting topic, and we are aware of that. And we have, it's fair to say, there have been some some preliminary discussions along that line. So we are looking at, all possibilities that that will provide the best outcome essentially for Genex and for Gemalong as a potential contract for an immediately available plant and for the future.
Yeah. So I guess we're not suggesting that we'll be going into the crypto mining business ourselves, but to the extent other operators want to put their plant and utilize our power, that presents a very attractive opportunity for our business.
Yep.
To supply power for those other operators to do those activities.
All right, that's the end of the question. Simon, I might turn over to you to finalise the call.
Well, I think we've covered it. So firstly, thank you, Craig, for hosting. And it's really been a pleasure to give this update today because it's been a transformative year for Genex. And I think the business is now ready to capitalise on these growth opportunities. And we've got a very strong baked in revenue profile, which I think over time will deliver good returns for our shareholders. So thank you very much for your attention.
Great, thank you.
Thanks, everybody.